Well, once again, the statistician has thrown the so-called experts a curveball, reporting a surprise drop in Australia's unemployment rate. That sent the dollar climbing and had economists paring back their expectations for future interest rate cuts. Neil Woolrich reports.
Bad news on the jobs front seems to be everywhere, except in the official figures. The Bureau of Statistics says the unemployment rate fell in January, while the participation rate picked up. 46,000 jobs were created in the month, although most of those were part-time.
The strength of the bounce has certainly taken both us and the general market by surprise.
Look, it's hard to get a read out of December and January because of the volatility we see on the seasonal side of things, but it was a good result, a really good result. And the market, the employment market has been quite robust over the last 12 months, but particularly the last 3 months, it's held up probably better than what we thought.
The unemployment rate is also expected to remain low, although some increase is possible over the next few months.
The Australian dollar gained half a cent against the greenback in the minutes after the jobs report was released, although it drifted lower later. That might be explained by what ANZ's Katie Dean says are some soft numbers underneath the robust headline figures.
What we also saw in today's data was that aggregate hours and also average hours worked both fell. Now, what that's telling us is that there's probably a little bit more slack in the labour market than what a 5.1% unemployment rate is telling us.
And SEEK's Joe Powell says the divide between the resource-rich states and the rest remains.
So we're seeing mining, oil and gas, healthcare holding up really well. Western Australia in the last 3 months has been up over 12%, Queensland 4.5%. So there have been sectors that have held up remarkably well. Obviously manufacturing, banking and finance and retail have struggled.
But it's not all bad news in the eastern states.
We're an unusual business. We're a little bit insulated from what happens. We supply a lot of product into the repair market, and as we've got markets that are declining in certain areas, people aren't buying new shoes, they're getting their shoes repaired.
Paul Guyett says he's surprised by the fall in unemployment in January. He says Leffler's Leather is a counter-cyclical firm and just refilled one position to keep its workforce at 30 people. But other businesses around Leffler's West Melbourne warehouse aren't doing so well.
I associate with people in the general business area here. We had a board meeting yesterday and a number of our board members made comments about businesses they're associated with and friends, that there is a lot of businesses that are hurting, particularly small businesses, and figures been bandied around about 15% down on last year.
Despite those pockets of weakness, the surprisingly strong jobs figures have economists revising their interest rate forecasts.
The RBA indicated that they would need to see a material weakening in the domestic economy if they were going to provide more monetary policy stimulus.
Meaning a rate cut in March is now probably off the agenda.